Welcome back to Rockstock Channel. It is Friday, July 12th, and we have, for the first time, two additional people from Fastmarkets. We're very privileged to have Raju Daswani, the CEO of Fastmarkets, as well as Grace Asenov, who's a base metals editor and moderated the panel that had Albemarle, Arcadium, and Pilbara at the Fastmarkets 16th Lithium Supply and Battery Materials Conference, which Rodney and I attended, and have been pushing out a number of, 8 to 10 videos. All of our viewers, if you haven't seen those videos, we interviewed Winsome Resources, Wildcat, Galan, Piedmont, Sayona, Atlantic, and also Ernie Ortiz. We had an investor connect. Rodney was on a pricing panel with a number of people, including Joe Lowry, which we just published, and I was on a panel talking about the U.S. elections. So a lot of content has come out from Rockstock Channel and Fastmarkets, kind of co-branded content. We'd encourage you, if you've not watched or listened to those, to do so. But I wanted to have Raju on. I had the privilege of sitting at his table at the first ever awards ceremony at the Fastmarkets conference. And there were a number of firsts at that conference. In addition to that, you had the live lounge where the recording studio, which I just referenced, and a few other, firsts. But this was really a great conference. I think it's expanded beyond just lithium, 1,100 attendees. But Fastmarkets also, we've just witnessed, it used to be part of Euromoney. I think you got bought out by a private equity group last year. So you could just talk a little bit about Fastmarkets. You also keynoted the opening session, and I thought what you said in that opening session was relevant for our viewers. And so if you could just talk about Fastmarkets and then how you open the conference, and then we can get into Grace and the lithium producer panel.
Yeah, that's great. First of all, thanks, Howard. Thanks for having me on this program. It's really a privilege, having listened to your show over the years, to actually feature on it. First and foremost, thank you also for your kind words about our conference, which I think was a great event. It's definitely one of the must-attend events of the calendar for the lithium battery industry, and great to have had you there, and as well as at our inaugural awards. So a little bit about us, as you just said. I think first of all, yes, there's been a change in terms of ownership structure of the business. So that doesn't really change anything in terms of our course of the business, which has been on a really high growth trajectory over the last decade, as we focus more in on serving the industries and the markets that we provide information for, with the content that helps and drives decision making in these industries. And I think lithium is such a great example of what we do, which is fundamentally providing price data, transparency in the prices, as well as deep analysis on these markets, that has really supported this industry through this critical growth phase that it's been through. And of course, we're seeing the industry going through its cycles, and that's not abnormal for a commodity market as it matures. But from a business perspective, we've grown our business. We're just under 700 people today. A large proportion of our people focused on energy transition, on batteries, lithium, and we've been covering this market actually since the 1960s, but really zoning in heavily on batteries and the use of lithium in batteries since 2009, almost, of course, aligned with the founding of Tesla and the development of that business. Today our business covers many different markets, right the way through from agriculture, pulp and paper, metals and mining, and of course within metals mining sits everything that we're doing around the battery raw materials, including lithium, cobalt, graphite, nickel, manganese, as well as other markets too relevant for the battery industry and the energy storage industry. I don't want to repeat verbatim my presentation, but fundamentally, as Grace will no doubt allude to when you speak to her, a lot of the focus around the market has been on the Inflation Reduction Act. That was a very recurring theme looking back at the conference now, and that's how we set the scene in my opening remarks too, talking about how the IRA is really reshaping the whole US battery investment landscape. And what we've seen, if you look at the market, is what we're anticipating really is 17% annual growth in EV sales over the next decade. And if you then extrapolate that into what that means for lithium, we're talking about lithium demand increasing to almost 30% per year, reaching over 400,000 tons by 2030. And that is a 5x increase if you compare it to levels last year. And then you look at the supply side, you look at how is the industry responding to this. And today you see the US has 27 battery manufacturing plants, and the total capacity, if you take all of that together, amounts to just under 300 gigawatt hours annually. And that only 12 of those plants qualify as what we call gigafactories. And you are seeing a lot of investment into the sector. You're seeing 40 additional gigafactories being planned, and that will then see production capacity triple to over 1,000 gigawatt hours. But in order to meet that demand that's going to come from these facilities, the US needs to produce at least just under 500,000 tons, 450,000 tons, according to our analysts and our teams, of battery-grade chemicals. And that means the industry is going to have to evolve. It's going to have to develop its domestic resources, as well as the processing facilities that are going to be needed to process the imported materials coming in. And they're going to have to support that, of course, through understanding regional dynamics. And that's where we play a part. And I talked a little bit about how we are developing our pricing to be able to present and reflect what's happening with regional pricing initiatives. And then you go one stage further up and you look at what's happening in the mine supply side, right at the top of the supply chain. And if you look back in 2023, last year, global mine supply was just over 1 million tons. And that was dominated by countries like Australia, regions like South America, and as well as China. North America, by contrast, or relative to this, produced less than 1% of global mine supply. And by 2026, we expect global supply is going to double. We're going to see significant new contributions coming in from Africa that does not feature right now. And of course, China will continue to take a very strong leadership role. And then if you look at North America, there's clearly going to be challenges, despite it having a lot of resource in the country. But of course, those challenges come in the form of permitting, regulations. And although many government representatives are arguing that most permits are issued within 3 to 4 years, we're not necessarily seeing that yet. But we know that the US Department of Energy, and we had representatives from the government speaking at our conference, will focus on these critical minerals markets, especially on the mining side, and of course backed by the IRA tax credits. That's expected really to boost domestic production. And then if you look at where the IRA compliant raw materials, this is the raw materials that the US can import under the IRA stipulations, it's going to come from primarily Chile and Australia. But a lot of it is going to be processed in China. And in order to comply, many new US processing capacities are going to need to be established in order to process that mined material. So that's the themes we talked about at the event. And I think the key thing is with the big 45x production tax credit, what you will see ultimately when this production kicks in is that the US is going to have a strong competitive advantage. You're going to see things like LFP cells, like the NCM811, which probably are going to be 20 to 30% cheaper than the production coming out of China. And that will position the US as a significant leader in global EV manufacturing. And I think that's what's really driving current market interest. It's why we saw record numbers at our conference, because everyone's interested to see how this situation is going to develop and evolve in the US in the context of the wider global markets. And I think that really was how we set the scene for the conference.
Thank you. That's really good intro. I want to ask two questions related to that came to mind. So just in terms of attendance and sponsorship of the conference, what was very prominent was you had Albemarle and then you had Exxon, right, as your two lead sponsors, right? And I so Exxon being there was a bit odd, or historically, they're really making a big push here. So you also had representatives from Imperial Valley in California. I'm not sure if you had representatives in Arkansas as well. So just from a US perspective, I noticed there were some new type of actors attending and sponsoring. And in this bear market for lithium, you had a smaller number of, let's say, the juniors who were typically, it's a few, but we noticed like a smaller number of those. In addition to those U.S. actors, we also noticed there were some substantial Chinese actors. SCT was a major sponsor with, 10 people. And there was another group, I think SNE, I forget, and a number of them at the speakers dinner, introduced themselves to us. You just saw like China has a lot of expertise, EPCM-like expertise, and they're very interested to get business, over here. So if you could talk about that, and also just any other differences in attendees from, auto OEM, like where they're more or less, of the GMs or Fords or SKs, of the world, has that shifted at all, given how the market may or may not have changed sentiment-wise in the past year?
So I think the first thing that really stood out for me at the conference was the excellent representation across the value chain for the battery industry. So it wasn't like it was fully focused with people trying to sell into the market and a few buyers there. We actually had a really good representation across the OEMs, right the way through to the automakers, right the way up from the miners. As you said, you had the likes of Albemarle, but you had most of the automakers represented at the event too. And I think that shows a market that has got a great growth potential, where there is investment going into the supply side and a huge amount of demand that is going to emanate, and therefore nervousness about securing supplies. Even though what we're seeing in prices today and the depressed prices in the lithium market, people know this is a temporary phenomenon, that if you buy into the long-term story, which I think is irreversible really in terms of where we're going with electric vehicles, you are going to have a very strong footing in terms of positioning, and a huge amount of importance needs to be put on securing supply. And that's what we see representation across the supply chain. It was great to see some of the, the traditional oil majors and carbon companies represented too. I mean, they were all there. Many of them were there as well. Exxon obviously took a big position, and I think it's quite understandable why they would do it for them. Everyone, again, needs to have a energy transition and diversification strategy. That's where we're heading. The world is shifting towards cleaner sources, and ExxonMobil, of course, recognizes the need to diversify its own portfolio, including sustainable energy solutions within that. So investing in batteries, EVs in this market aligns with its global trends in reducing carbon emissions and transitioning and finding ways to have some directional movement towards renewable energy as a core component of its long-term strategy. And of course, it's a big market opportunity. There's clearly technological synergies as well for someone like ExxonMobil with their expertise in chemical engineering and material science that can be leveraged into batteries technology too. It's about sustainable image, it's about regulatory compliance, strategic partnerships, innovation, the opportunities that come with energy storage. So there are many reasons why they would be there. You gave me a long list. I don't want to go into every sector and to why they were there, but I think that kind of covers it in terms of it is still, despite the cyclical position we're in, it is still a super exciting market, driving a lot of interest.
That's great. Thank you, Raju. I think let's go to Grace, and Rodney has a whole host of questions.
Okay, great. Grace, we saw the panel, and I've seen a couple of posts around the key takeaways from the conference. In your opinion, the overall sentiment from the conference regarding lithium prices, I saw one of the things noting, is there room for prices to fall even further, despite converter margins being around zero at the moment?
Yeah, thanks so much for having us here too. So I moderated the keynote panel on day one, and that was with Dale Henderson, the CEO of Pilbara, Sarah Marcel, the Chief Strategy Officer at Arcadium, and Eric Norris, President at Albemarle. And I would say overall sentiment, in my opinion, from the conference was still pretty bearish about where prices are headed. But Sarah Marcel in particular pointed out that, just given the number of attendees at the conference and interest in the industry was a sign of how much opportunity is still left. And she specifically said that we shouldn't be distracted by what we read. So I thought that was pretty positive. Obviously, some of these narratives that are optimistic, there's like an agenda, like they have an incentive for prices to go up, probably too. But Eric Norris from Albemarle talked specifically about the current pricing environment and highlighted that the fundamental challenge facing the industry is the economics of operating right now. And he made the point that global lithium prices are tied to China, and OPEX outside of China is obviously higher. And so there's like a real disconnect right now between those two things. And as a result, we're seeing a lack of investment in the West and projects potentially shutting down, particularly on the conversion side, because they're operating at a loss. And he called on the industry to do a better job of understanding price transparency and the different value propositions for different products in different parts of the world. And I think that's a real vote of confidence, too, for Fastmarkets, because we recently launched a suite of North American lithium prices, and those are to complement our European lithium prices and Asian lithium prices, basically because we're seeing that increasing regionalization from some of the market.
On that note, again, one of the points we made was it seems there's an increased need from the up and the downstream for pricing transparency and risk hedging. I guess there's a bit of a debate as to how that's best delivered. Your thoughts on how that could evolve in an effective manner for all the participants?
Aside from the North American prices that we just launched, a big topic on the panel was auctions. So Albemarle had done maybe like 7 to 8 auctions in the last couple of years, and Pilbara has done a few too, although not as much recently. And those are auctions of carbonate and spodumene. And again, Eric Norris said that he thinks that those auctions will bring more price transparency to the market and shed more light on the liquidity that's out there and boost the indices that are already out there. And he specifically said that it would help segment the opportunities going forward. And I, again, personally interpreted that as increasing regionalization. Dale Henderson from Pilbara also said that the auctions will help with market maturity and boosting trading efficiencies that we've seen in other markets, such as iron ore. So he specifically said that the auctions will help solidify specs and boost volumes from both buyers and sellers, and then also just bring the industry together at a common marketplace.
And linked to the risk management is the pricing mechanisms, and examples include payables, for spodumene concentrate relative to chemical indices. How do you think that could evolve and improve?
So we have been seeing an increasing use of payables in the spodumene market, and that's basically where the value of spodumene is derived from a percentage of the price of lithium carbonate or hydroxide. And it basically helps the market ensure that they're never overpaying for spodumene because it's tied to the price of the refined products. And we've seen people using that to be able to hedge their spodumene risk, basically. So using the lithium carbonate and hydroxide contracts on CME, and also the hydroxide contracts on LME and SGX to, again, hedge their spodumene exposure. Those spodumene payables, we're mostly seeing that in a long-term contract sense right now, rather than being used so much in the spot market. But, they're all structured differently, and there's not like a lot of specific consensus on those payables at the moment. So I think we're going to have to see how it develops. And also, Eric Norris, again, pointed out that the reason that we need payables for spodumene is because the value of spodumene as a percentage of the selling price of refined lithium has increased really significantly over the past few years. So pre-COVID, if we look at Fastmarkets CIF China 6% spodumene and compare that as a percentage of China, Japan, Korea hydroxide, that percentage was like 4 to 5% pre-COVID. up until like 2021. And then it started to move up from there. And today it's more in a range of 7 to 10%. So it's almost double in some cases. And I think that reflects that refiners have really had their profit margins squeezed, more so than the miners. And, spodumene prices have fallen quite a bit too. So I don't want to underplay that, but I think spodumene producers have a bit more flexibility because of the shelf life of spodumene. So they don't have to sell, as opposed to refiners that, their products do have a shelf life. And so they pretty much do have to sell immediately.
And then on your panel, one of the themes was producer flexibility between carbonate and hydroxide. Your thoughts on where cathode choice is going in Western markets?
So Dale Henderson from Pilbara talked a little bit about this. Pilbara has a JV with POSCO to build a 43,000 ton per year lithium hydroxide facility in South Korea. And he said that that's still going well and still on time. But I basically asked him that question because I was asking, like, is Pilbara making a bet on hydroxide? And he said that Pilbara has also a partnership with Ganfeng, which is a large Chinese producer, to build a lithium conversion facility for carbonate or hydroxide. The study for that is expected to be done by early next year. And so he said basically that the jury's still out. He didn't really want to give an answer on that one. And basically because their core business is in spodumene mining, he said, like, it doesn't matter to them for that reason. Sarah Maricel from Arcadium, Arcadium is the merged company between Alchem and Livent. And Alchem has brine assets in Argentina, and they're expected to use Livent's experience with DLE to basically lower production costs. So she thought that flexibility was, going to be necessary. Basically, she pointed out that 4 to 5 years ago, a lot of people thought that high nickel was the future of batteries, but we turned out to be wrong about that. And so we're going to continue to see an evolution of the cathode roadmap. She specifically said that trends in recent years from consumers have focused on hydroxide, but she said more recently that they're increasingly focusing on carbonate, and that's really that LFP growth for that one. And she also, just to finish the thought too, she turned the tables on the audience and said that, producers need to be flexible, but consumers need to be flexible too, and they have to build that flexibility into their own supply chains as well.
Okay, and just on your earlier point with spodumene, we've seen Africa's spodumene production rising thanks to aggressive Chinese investment. In your mind, will Africa material displace Aussie volumes, or will it add to that supply headed for China?
So in the immediate term, we're thinking that it's just going to add to supply. It's not going to displace supply in China. We actually saw our first spot trade of African material to China just like last week. But this market has been really opaque, and it's been pretty hard to tell what's going on. There's a degree of confusion about what's being produced and in what volumes. And in some cases, people are talking about spodumene concentrates, but the product is actually closer to direct shipping ore, which is like 1%. So again, not expecting it to really displace just yet. And our analysts' view is that it's China is basically using the African material to supplement their own, so that they can save their own material in case they need it in the future, and use the African material now while it's cheap and available, and there's no supply chain issues, I think. So I think it's a long game there.
Interesting. And then a last one from me is given where prices have got to, you also I saw some commentary, I think, from Orson Devaney at Piedmont, is the battery recycling profitability is under pressure, particularly with, I guess, with where carbonate is and LFP. how is that industry going to adjust to the new reality?
Yeah, so for black mass as an industry, lithium prices have obviously been dropping dramatically, and so have other like key raw materials for batteries like cobalt too. They're all trending down. But we have seen recyclers trying to adapt to survive in the current climate. One way, for example, is they've been selling streams of copper contained in black mass. Obviously, we've had a pretty strong copper market in the last year, so they're trying to take advantage of that. And then I would say the other thing that we've seen happening is recyclers using tolling agreements, basically providing recycled battery raw materials in exchange for production battery scrap to have a steady income. And then the last thought here too is that Fastmarkets payables for black mass in South Korea have actually trended up in the last year despite weaker margins. And that's really because there's new capacity coming on in South Korea. So there's demand for it. So I would say there are a couple maybe pockets of bright spots.
Okay, great. Thanks, Grace.
Grace, I want to pick up on the regionalized pricing that you just launched. Historically, there was some talk about green premiums, but I've heard in the vernacular in the recent months the concept of security premiums because, whatever, green and ESG and other things are less, in the news. A headline coming from the conference from Eric Norris's out of either Reuters or Bloomberg was that, and also Paul Graves said this on our podcast, that the incentive price, and this is caveat, the incentive price needs to be $20,000, but that's for ex-China supply, right? So that the incentive price for China supply is lower, and the market is very substantially China-led. 50% of the market is China. So how do we, in my opinion, we don't know what, GM and Lithium Americas have agreed that there must be some sort of floor price, in their deal, and the DOE, Jigar Shah, loaning money to that. I don't know what that number is. I don't know if it's 20,000 or it could be in the high teens, but how do we, and you focused a lot of your remarks, Raju, on the U.S. focus of this, but the U.S. has been struggling to make vehicles at a reasonable price. So if you're basically saying you need to pay a higher price for lithium, it impacts potentially the price of the car. But I guess if you could just comment on this dynamic, how do we build a U.S. supply chain, or North America and European supply chain, if it's still very much a China-dominated market, and Albemarle is scaling back its U.S. investments, they're scaling up their Chinese investments because that's where the market is, and they perceive themselves to be like a global company. It's unless and until the automakers say, okay, fine, I'll pay you 20 grand. We're in a bit of a pickle. So how do you see your pricing mechanism? I mean, you're launching regionalized pricing, so maybe this is a mechanism to get the OEMs to understand that that just has to happen.
Yeah, I would say, we launched the suite of prices. It's technical and battery grade hydroxide and carbonate for US and Canada earlier this year. And so far, we have seen those trading at about a $1 to $2 premium. So I think that's because of the tariffs in the US, limiting the ability for buyers to source from elsewhere, and also some psychological effects. Eric Norris talked about an IRA premium, and he thought that it would basically either prices have to improve or an IRA premium needs to exist to draw that material for processing in the US away from China. And I think when you're talking about a security price or a premium, that's kind of IRA, right? Isn't that the whole point of IRA? I think that's just a different name, a different way of branding, maybe, but it's the same to me. It sounds like almost the same thing.
Yes. The IRA, though, and I don't want to get into how arcane some of the terminology is, but it was meant to level the playing field in terms of production tax credits, right? So the cost should go down for processing, right? I think the 45X, I forget exactly. It certainly impacted on on the battery side, and then they did make it. They've changed the guidance now. It also could be a factor in mining. A lot of these rules just have been clarified, so maybe you're not seeing so much the impact from them, but just from a U.S. election point of view, because I saw Jim Farley give an interview like 10 days ago, and he wrote like an op-ed in LinkedIn, full-throated endorsement, to the EV narrative, in contrast to, all the negative headwinds that we're seeing. So I thought that was a good sign, and I believe that if Trump wins, Jim Farley should have the ear of Donald Trump, in the same way that my comments I was more, everyone was very pessimistic on the U.S. election panel. And since the conference, we've had the debate with Biden and Trump, and that's leading to a whole host of political volatility in the U.S. presidential election, which I'm following on a day-to-day basis. But I still, I'm focused. Actually, the GOP convention is next week. The rumors, I don't know when we're going to publish this video and if we'll know, but the talk is who is going to be Trump's VP pick. And there are 3 candidates that seem to be shortlisted. One is Marco Rubio. What's relevant about that is I remember nearly 7 or 8 years ago, he had an anti-made in China 2025 kind of piece. He was like very focused on the China threat. And he's been the most vocal person against the Ford CATL deal. So if he's the vice presidential pick, that seems to be a bit negative to the EV narrative. Another one is this North Dakota governor, Burgum. I looked at some of his rhetoric when he was running against Trump, and he's very pro oil and gas, in North Dakota. Why are we subsidizing? So like the headline risk of either of those are not great. JD Vance is a third, speculation. I don't know. By the time we publish this, we may know, but that's in the near term. I think we're going to have a fair bit of, volatility. But as I said, I was more optimistic than some of my peers because I do see a bromance developing, between Elon Musk, and Trump and a number of other, proponents. Trump's just not going to want to lose to China, overall. Whether or not we welcome them in, I don't. China technology into the United States, I'd be a big proponent of letting CATL and BYD and Ganfeng and others to share, their expertise in America, so that we can catch up in the same way that America allowed Japan and Korea. Anyway, that's I don't know how that's going to play out, but I just do see a big conundrum, right? There are battery. I think you mentioned, Raju, I don't know, 400,000 tons, 500,000, whatever the number of tons of like lithium that's going to be needed just for the U.S. market. How do you create a supply chain, in Quebec, in North Carolina, in Nevada, in California, in Arkansas, if prices are 15,000, it doesn't seem economic.
Sorry if I can interject. And I think just to your very first question that you posed to Grace was about, how without China are we going to develop these supply chains? And I think the IRA has to be taken in the context of a longer term strategy over 10 years, right? And I think the IRA kind of serves a short term plug in terms of using regulations, incentives to drive and catalyze investments in both mining as well as processing projects. And then you'd expect, once you have that, is to invest more in the expansion of that capacity, build out more trade partnerships, see what happens in terms of recycling, and also using that as a additional source to drive longer term supply. And then before you get into the longer term horizon around 10 years, where you then want to just see a significant growth, the establishment of more domestic, regional, IRAs focused supply chains, and and whether there's also an opportunity to position the US as a leading player in the market. So I think that's where you got to see it. I don't think the IRA in isolation will do it unless it's taken as part of a wider program.
Grace, you have any further thoughts?
Yeah, just to add to, I think Raju included this in his opening presentation as well as one of the last slides, but one of our analysts did a battery cost analysis. If you paid an IRA premium for the materials for a battery and then you get the tax credit back at the end, how does that compare to a battery made in China? And our analysts think that it could potentially be cheaper to produce that battery in the US. So I think that's really compelling for the West in general, right? Like that we could maybe be competitive with China in this. I think the assumption is that we're so far behind, and it does seem like we are, but I think we still have a shot at this. In terms of the IRA too, like one of the key conclusions for me coming out of the conference was that being pro-American or anti-China or however you want to phrase it is probably a bipartisan issue, right? It seems like both candidates as of now support like the tariffs and everything that have been happening. So I think it's unlikely that the IRA is going to be repealed. And some trade lawyers that I've talked to about it have basically said that it's almost impossible for Trump to unwind the IRA. And if he could, it would take a while, like a couple of years probably.
I think, Grace, that is a very good point. That I don't know which analyst at Fastmarkets put that together, but that analysis, if it's true, if the IRA actually fundamentally levels the playing field, despite the fact that lithium prices could be, in the 20,000s, that's pretty compelling, right? Like GM, Ford, SK, Innovation, LG should be shown that slide in negotiations between Albemarle, Arcadium, and themselves.
It was Muthu Krishna, just to give him a shout out. That's his analysis.
Okay. Thank you very much. We very much appreciate the relationship. We've interviewed and will continue to interview a number of your analysts. Actually, I did remember one more. The lithium hydroxide contract on the CME has become very liquid. If you can comment on that, and are you planning kind of carbonate or spodumene indexes?
I think, first of all, when it comes down to indexes and financial markets, I think the market really determines what it needs and what it will rely on. I think it's been great to see the incredible uptick in volumes being traded on the financial market, which I think just shows the health of the underlying physical market. And what's been really positive to see is the amount of open interest. That really is an indication of long-term positions being taken, not speculative, but actually long-term positions, which would indicate that these are contracts being used in the supply chain, potentially by the big OEMs, to manage their risk. And that is a positive thing, because the more you can manage the price risk, the less volatility becomes an issue in terms of driving the success and adoption of batteries into electric vehicles. I think that's been a really positive sign for us. I mean, Grace, do you want to add anything to that?
Just add, we've seen some interest potentially in a spodumene contract, but like Raju said, we're going to wait for the market to show us the way on that one. And there already is a carbonate contract on the CME, so we do have hydroxide and carbonate available there, and they're both trading.
Our first priority is to create transparency in the markets, right? So first thing we'll do is look at any new market as it evolves, engage deeply with the industry, with the players, with the participants, allow our prices to give them more transparency. And then it is a market choice to take that price, and if they choose to use it as a physical benchmark to aid contract or procurement or purchasing decisions, that's great. If that happens and the adoption is widespread, then it is a natural progression of that market then needs an instrument to be able to manage risk, and that's where the exchanges come in. So I think our role is to create transparency, and if we do a good job creating good indicative prices and benchmarks and indexes, then the market really has to determine the rest of the journey for our price.
Sounds good. I had not realized you launched the carbonate one. Congratulations. A lot of people think that lithium has some correlation to iron ore, and so spodumene, I'd encourage development of that market as well.
Yeah,
but that's just one voice. Anyway, thank you guys very much for sharing your thoughts, and look forward to seeing you certainly at next year's conference. And would encourage all of our viewers, if you can make it, it will be in Las Vegas again, I think next year, and really valuable, useful content and networking. Rodney and I found it very useful, and very happy to participate, on some of the panels as well. So thanks again, and enjoy the rest of your summer.
Thank you.
Thank you.